All right, all right, all right.
All right, all right, all right.
Check. One,
Mics are
two,
hot.
1, 2. Scurry.
What's going on, everybody? Welcome, welcome, welcome.
What up?
We're getting 1.9 trillion. Hey! We definitely need to get one of those like money printer burr machines in here and just start spreading some cash
money
around. Yeah, man. Look at this. What is it? 4.5 trillion new dollars in circulation, just driving stuff higher.
Mm-hmm. That's a good chunk of change.
I mean, it's all right, you know.
This is an exceptional stimulus bill for the everyday American.
Oh, yeah. People are like, they're cash rich at this point. I have a prediction.
If you have kids.
Disney World by like late summer is going to have like their best summer ever.
They're going to be lit.
Yeah. What else is going to be lit? Obviously, all things travel.
All things travel. Airbnb booked up.
Done.
It's already...
No more inventory.
Yeah.
It's already slim pickings on Airbnb.
Yeah, man, look at the breakdown. I mean, we can obviously dive into this, but so much to talk about, so much money in the system. I guess that's why Bitcoin is making not new highs, but holding up while, some high-flying stocks have really gotten hit hard over the past couple of weeks. All right. Well, looks like we're good to go. Let's go ahead and just dive into the charts and talk about where we are in the grand scheme of things. So I always like to zoom out and kind of think about the bigger picture first, and then we can drill down and talk about the more immediate thing, what's happening right now. So if we look at Bitcoin, if we look at yearly charts across, Bitcoin, the S&P 500, gold, and the NASDAQ, you can see Bitcoin so far in 2021 is up about 85 to 90%, so a little bit. Standard year. You got the S&P, which is a little bit positive, 3 or 4%. NASDAQ down 1% or 2% on the year, and then gold, which is down 10% on the year. So pretty interesting to see how Bitcoin is pretty uncorrelated to stocks, at least so far on kind of the bigger picture scale. And then drilling down, if we look at the kind of the daily charts here, we know that the NASDAQ got hit pretty hard. It was down, about 12, 13% off of the all-time highs from a few weeks ago. And then things like Cathie Wood's ARK was down 30 to 35%. So why is that, guys? Why are stonks pulling back?
Many momentum stocks got crushed over the past few weeks. Simply because of things we've been talking about for weeks, right? Like valuations were frothy, and the momentum stocks in particular, it felt like they were being bought at any price, Yeah,
valuations don't matter.
Valuations didn't matter. Moon, YOLO, and that eventually catches up to investors.
Yeah.
Are you telling me that my stocks will not be up 100% every month?
You cannot.
This is crap.
No. Like that guy on TikTok, 2,000% returns a month are not normal.
Well,
or even possible.
Look, forget stocks, guys. We just got to YOLO into NFTs because, look at this.
No, don't. I can't. Somebody needs to explain like I'm 5.
Yeah, we'll talk a little bit about NFTs, which have just been going nuts. I see some writings on the wall with this.
I can't wait to hear.
Yeah.
Are NFTs the next ICO?
They're actually, so I think NFTs are better than ICOs. ICOs were basically like all these false promises.
Yeah.
NFTs are at least honest. Yeah. It's like, look, you know what you're getting. It's not some team with a bullshit white paper saying, we're going to change the world by creating the decentralized blah, blah, blah. It's, look, you can get this digital, scarce, thing. Could be art, could be something practical like a domain name, could be a wide variety of things.
Jack Dorsey's
tweets, is it frothy? Is it hot right now? Absolutely. Are people going to lose money? Hell yeah. Am I bullish on it long term? In some sense, I am.
Mm-hmm. Definitely have seen some interesting. I was reading today in the community, the NFT chat.
Yeah.
And there were definitely some interesting things being said by members about NFTs and how they can take off going forward. But this, I guess, what is this? Is this a GIF essentially that you're buying for $250,000? I don't really quite understand why people are spending so much money.
That's kind of where it got weird for me too, was like my mental model for NFTs like a couple months ago was that it was basically extending tokenization to digital assets or collectibles assets. But it's gotten so much weirder now with videos being the underlying asset, which seems weird because there's not inherent scarcity there.
Yeah.
I get if you want to put a baseball card or you want to put an antique car or something that's physically actually scarce in the real world and tokenize it and then have it be tradable and trackable via the blockchain. That to me makes a lot of sense. We've talked about tokenization for years, tokenization of all kinds of assets, whether it's company ownership or collectibles. But where it gets weird for me and the mental model breaks down for me is the whole idea of non-scarceable assets being tokenized or being NFT.
Yeah.
Like a tweet?
Like an
image.
Tweet or
an
images.
Image of a tweet.
Yeah. Look, here's what I think. You can prove digital ownership over something, and it's weird. It's a new thought to take something that can easily be copied. And so for me, I'm not going to go spend $1 million on some digital art. I'm just not going to do it. Yeah. Am I going to lose out potentially? Sure, I don't care. Right? Risk models are different. Where I see like some practical uses in the future past this kind of first hype cycle, which is really what it is. This is the very first hype cycle, which everybody that's new to markets usually FOMOs into, right? They're like, oh, I don't want to miss the boat. I got to FOMO into NFTs. I got to buy, this basketball card for $250,000 or this tweet for a few $1,000,000. Like, I never chase that stuff because I know this is going to deflate over the next couple of months at some point. Like, there's going to be a collapse in aggregate prices of NFTs. And then it's usually the second wave where you get more sustainable things that actually gain traction and value. And look, I'm not hating on it. And in fact, I think it's kind of cringy to see some old school Bitcoiners totally shit on NFTs because they sound like the people that were calling us stupid in the early Bitcoin days, right? So you never want to be that grandpa that's like, oh, these kids don't see value. They don't know anything. It's like, no, there's actually real stuff happening in the NFT space, but you have to be careful. If you go in and just YOLO into this stuff that's hundreds of thousands or millions of dollars, you're likely going to lose a lot of money in the short to medium term.
Yeah, and I definitely don't want to be like the old millennial who's like, oh, I don't understand these kids. I'm trying to understand this. I want to be hip. And some of the use cases I was hearing were like things like buying, I don't know, something like a Taylor Swift, something from a Taylor Swift where you get paid royalties or, something like that.
That makes sense to me.
Yeah. And those are the types of use cases I'm trying to think through. But when I went on this website and I looked and I clicked on one of these and it was just like, a video with some digital looking images. Yeah. $250,000, I'm just like,
yeah. Well, and look, let's be honest and candid about what's happening in this space. There's probably some money laundering happening here.
Oh, for sure.
Like, I'm not going to point any fingers. I don't know anybody personally that's doing that, but that's probably happening at some level. Look at like the crypto kitties a few years ago, how that kind of hype cycle played out, right? That was like, you could call that kind of a precursor to this real NFT boom. Like that was kind of the first little experiment. Now this has gone mainstream. You got guys like Gary Vaynerchuk talking about it. Mark Cuban went from being a Bitcoin hater to like all in on NFTs, which is weird, and Dogecoin. So I don't know. It's just interesting to see where the attention goes, and where attention is, that's where value gets kind of sucked into. I like what you said about like digital rights to music and movies and stuff like that. Yeah. Makes sense to me more. Yeah. Right. Yeah. Where especially if you can get payments from ownership of scarce stuff, even if it is digital and it can be easily duplicated on the internet if you own the rights to
unique.
It. Yeah,
to you.
That's totally right. Yeah. I mean, we've done that with music for over a decade now, where music is digital and can be shared and downloaded and pirated, but there is a true owner of that asset, even if it's a digital asset.
Yeah.
And the economics of that, like they get to choose where that thing goes because they own the economics of it.
It gives it some type of intrinsic value.
Yeah.
But the tweet one is weird though, because like tweets are inherently public and you can share tweets as long as it's not a private account.
You can screenshot it and just have it on your desktop.
So it's like something that is already infinitely shareable, where the ownership model isn't already. I mean, maybe there's a bull case for Twitter, because maybe that means ultimately, maybe popular tweets do get like digitally owned with copyright at some point.
Yeah, I guess. And then if anyone uses a picture of it or whatever, you can sue them or charge them for fees or whatever for uses.
Okay, so what I love about NFTs are it's bringing more eyeballs to the crypto space, and it's something fun, and it's something that is reimagining ownership of different assets, right? Yes. And it's creating different ways to invest and make money.
It's proving the tokenization use case, right?
Yeah.
So what if we start with NFTs and it moves on to businesses, and assets that we've talked about for a long time?
Absolutely. Yeah. And it gets people thinking creatively about different ways to have fractional ownership in different things. So I think it's a net positive. I just, I like to issue warnings occasionally as the kind of the guy that's been in this space forever. Like, just be careful. Don't YOLO in happen during hype cycles where everybody's losing their fucking minds over this stuff, you know? Like whenever it dies down and when the media is like, oh, the NFT craze is over, that's when you want to step in and go, okay, what's actually sustainable here? What makes sense? What's collapsing and likely to never come back? And what's down that I see true value in that I could step in and maybe get things at a 90% discount, right? Your risk to reward is just much better there. So
Interesting stuff.
yes.
Yeah, fascinating.
So anyway, back to our new $1.9 trillion package.
Government's making it rain on
Right?
everybody.
I'm kind of jealous. I'm not getting any of this. Where's my little relief bill? Make a little box down here for Chris Dunn.
Gotta get that adjusted gross income down.
Right.
You qualify.
So Nick, for anybody that doesn't know, what are the limits? What's happening? Where's this money going?
Well, the main talk of the town right now is the actual stimulus checks that that are actually going to individuals. That's going to be $1,400 per person. If you make under, I think it's $75,000 or $150 if you're married. That's adjusted gross income. And the thing that's interesting about this is the prior bills, if you had children that were under 17 over 16 years old, you didn't get a check for them.
Yeah.
But now you can get a check for dependents, basically any age, $1,400 a pop. So if you have 17, 18, 19-year-olds, 25-year-olds, and, you know, whatever.
Still living at
that
home.
are dependents or other adults that are dependents. So it's widening the scope of who can actually get a check. So a family of 4, you know, could end up with coming into some serious cash by getting $1,400 for everybody in the family.
So even if they're fully employed and like they don't show any markers that they actually need the money, just because their adjusted gross income is down.
Adjusted gross income.
What's the cap on it?
75,000 for a single individual and 150 for married. So
Shit, and that's way higher than the average income, right? So most people are going to get that.
I mean, most people are going to get it even if they didn't lose their jobs or aren't unemployed, right?
Yeah.
And the other thing that's really huge in this package is the child tax credit is being expanded pretty significantly. It's going from $2,000 to $3,000 per child, and they're expanding it to where you could actually get a monthly check for 6 months for half of the credit.
Wow.
So on top of the stimulus checks that you're going to get for yourself and your children, you're also going to potentially get another check for each child.
Yeah. So this to me seems like a gross misallocation of money. That's just my opinion.
Well,
what do you guys think?
It is. There are going to be people that do not need money that are going to come into thousands and thousands of dollars, potentially upwards of $10,000 per family, depending on their income.
Yeah.
So yeah, there are a lot of people that are going to benefit greatly from this, and there are also, you know, people that need it that are going to get it too. You know, people that are on unemployment, they're not making a lot of money.
Are they extending heightened levels of unemployment benefits?
Yes. So
seems to me that's where the money really needs to go.
That's where it needs to go. People that are unemployed need to get that extra kicker, that bonus money. I think it's $300 or $400 a week now, and those are the people that really need the money.
Yeah. What do you make of it, Trev?
I actually don't even mind so much the direct stimulus payments, because obviously we know that some of that is going to go to people that don't really need it, but that's fine because it'll get recirculated into the economy and help, you know, jobs and people that actually do need it. I'm not so concerned about that. What I am interested in and think there could be problems with is all the other stuff, the hundreds of billions of dollars that are allocated to, like, you know, just sort of generally allocated to like large programs.
Yeah.
Like,
this is kind of like a Democrat, like, we get everything we want kind of package.
more or less. Yeah.
Yeah.
There's definitely some stuff they wanted that they didn't get. But I mean, there's a lot of stuff in here for like state aid and, you know, there's, you know, 10 billion for infrastructure that's like very not specific. And so it's like a lot of this money, there's going to be a lot of fraud probably and a lot of waste. And it's going to go, those parts of the bill I'm more concerned about. going to special interests than to the actual people themselves. Like at least the direct stimulus checks go to we the people, but the this other stuff, 176 billion for education, we could dive into that, but even when you dive into the subcategories, there's still a lot of money there that has a lot of different places it could go allocation wise.
Yeah.
And I'm just afraid that people are gonna, or organizations are gonna take advantage of it, and there's gonna be a lot of like grift and just a lot of like fraud and stuff like that. It's I mean, it kind of reminds me, right, of like the defense spending, right? We spend 700+ billion a year, and you hear stories all the time about how, oh, we wasted 40 billion on a plane that doesn't work or doesn't fly. There's $5 billion that went to the Afghan government that we can't even account for. You know what I mean? Like stuff like that. You're like,
And knowing some people in the military, they've actually told us they have to find ways to spend their budget, because if they don't, they're going to lose it and they might need it in the future. So it's almost like bloat and misallocation of capital is built into the system by design.
Yeah.
So it's a hard thing. I don't claim to have the answers. All I want to know is, how high does it make Bitcoin go? No, I mean, we've been talking about inflation for a few weeks now. Rates are going up. Stocks pulled back a little bit. It's weird because you got the S&P and the Dow that's actually slightly up, and then you got tech that's just gotten hit. And you guys have been calling for that actually for several months now, talking about how tech and the high flyers and the high growth is like super risky. And we've got stuff like, if we take a look at what is it, Stitch Fix.
SFIX.
SFIX, there we go.
Having a rough day today.
Yeah, man. Down, call it 30% on the day after having a really nice accumulation range breakout. Went from $30 up to 110. And then, Trav, I think you were taking profit along the way.
Yeah, actually timed it pretty well. I think I sold the last of my lots just above 100.
Hell yeah,
and,
nice.
So I was out, and I was telling people in our community and other people that I know that own the stock, like, hey, I think the stock is ahead of itself.
Yeah.
The last quarter's results were no better than the previous 2 quarters, and the business has a good long-term opportunity, but the stock has been 5 to 8x over the past year.
Yeah.
And I think people are getting carried away here.
Yeah.
with the valuation. So
yeah, I mean, a lot of high flyers, like even Peloton had a deeper pullback. And then again, I always like to look at the bigger picture first and just realize, like, okay, there's a reason why Bitcoin's up, call it 80, 90, 100% this year, and then stocks are basically flat. I think part of that is fundamentally driven. Part of that is the hype cycle and the halving cycle. But it is interesting to see that gold is actually down quite a bit from its all-time highs still, right? So let's see, as of today, it made a low, call it 20% almost off of the all-time highs there. So Bitcoin is definitely the black hole that's just been sucking in capital this year.
Yeah, it has actually been interesting because we knew that a lot of these momentum stocks could end up selling off pretty hard. But seeing them actually do it last week I was just looking at some of these corrections, and I'm like, the volatility is astonishing.
Yeah.
And I can only imagine what the TikTok investors are thinking right now. Like, I hope they're all okay.
Yeah. Well, they're getting a lesson in how markets actually work.
Yeah, and it's almost a relief to know, like, we're not crazy. Like,
yeah.
we had joy of missing out, through a lot of these crazy moves, and we stuck to our guns and our strategy, and I'm glad that I didn't get stuck in some of those crazy volatile stocks.
Yeah. Yeah, absolutely. Well, let's talk a little bit more about crypto, dive into some charts, and then if you guys have any specific stocks you want to look at, we can do that. But, just kind of zooming in on the daily chart here on Bitcoin, after the 20K break, we've just been in a really kind of beautiful technical bull trend. And we had a pullback a couple weeks ago to retest 40K, which was prior resistance, now turned support. And as of today, we're back up above, 53, 54K. And so one thing that I like to kind of keep my eye on is some of the on-chain fundamental data. If you look here on this website called Glassnode, they have some really beautiful dashboards where you can look at different things like market tops and bottom indicators, exchange activity, warning indicators, stuff like that I really like to look at. And a lot of this stuff is definitely showing that we're in a bull trend, but I'm not seeing any blatantly like screaming obvious signs that we've hit a market top. You know, if you look at things like reserve risk, you can see we're kind of mid-range. Also the Puel multiple, you know, we're getting obviously a little more to the upside, but we haven't gone parabolic yet. Even things like the Z-score, we're not anywhere close to the peaks from the prior market cycles. So this is the stuff that I just like to combine with the charts to kind of give me a guide. And obviously anything can happen, right? Like you could have Satoshi wake up tomorrow and dump $1 billion on the exchange, and that changes the thesis. But so far, I mean, things are just looking still healthy. To me, this feels like kind of the spring of 2017 where you've got big growth on a percentage basis, but things just don't feel ridiculously overextended at this point.
Yeah, I agree.
So, you know, I've been taking some profit along the way, and it's nice to be able to trade in and out of this, but it just feels like Bitcoin is now becoming, you know, what it was originally designed to do, which is attract capital when the world is kind of losing its mind and printing trillions of dollars.
So how does Bitcoin do while the economy is growing and booming over the next few years?
That's a great question. I mean, I think inflation fears obviously drive capital here. Trav, what do you think?
Yeah.
Yeah, I mean, even stuff like, you know, Ethereum, like this has also been looking pretty nice. We recently broke the all-time high of 1,400. And, you know, as people in our community know, like I was building into a position in the 300s and 400s and then added on this ascending wedge. And then we had a really nice pullback a couple of weeks ago, retested the all-time high, and then we're coming off of 3 days of bullishness. So I think there's still, you know, a lot of upside for Ethereum. And with that, we've also seen other high flyers like Uniswap. You know, Uni has just been a beast. We got in this around $5. I've been kind of scaling out some along the way. But, you know, eventually DeFi is going to go into a bear market. Eventually a lot of these things will get hammered, and some of them will fail. Some of them will turn out to be like Ethereum, you know, 2.0 or 3.0 or whatever. I don't necessarily try to pick winners and pick projects that are going to win multiple years into the future. I just look at the charts. I trade the momentum. I use the fundamentals, but in crypto, it's almost like the hype cycles drive price action more so than underlying fundamentals. So as a trader and investor, it's like, it just makes it easier.
Yeah. I'll go ahead.
Oh, no. I mean, I was just going to elaborate when you were asking about Bitcoin too. I think when you think about the macro variables, none of that has changed. All of the bullish macro picture behind Bitcoin specifically remains true. I guess the real question is, can it get overextended even in a world where inflation is rising? If Bitcoin rises too quickly, too far too quickly, then it could have some corrections within the local time periods. And so
yeah,
it's always one of those things where you can't just say, oh, well, yeah, all the macro variables are aligned, so it's going to do nothing but go up, because at some point it might get too parabolic. And
that never happens. Bitcoin never goes parabolic and crashes.
Yeah.
It just stays up forever.
Yeah.
I will say that the technical trends look really healthy with Bitcoin and both Ethereum, and the moves don't look completed.
Yeah.
Like the actual extensions,
Yeah.
look like they still have room.
The one thing that I'm constantly kind of in the back of my mind thinking about is just market sentiment. Obviously it's cool to be a Bitcoin bull right now. And when that happens, I just get a little bit nervous. And that's why I take profit along the way, because you never know how far things can go. This bull trend could get cut short by anything, right? Or it could far exceed. And one thing I like to use as a guide, which at this point has kind of just become a self-fulfilling prophecy, is the stock to flow ratio. And if we take a look at this chart, you can see that every halving cycle, to your point, Trav, like Bitcoin is notorious for getting overextended, and the hype cycles drive that much further. What I'm kind of interested to think about now is, like, now that everybody knows about stock to flow and everybody knows how to look at the fundamental indicators, like, is there going to be a trap in here somewhere where maybe it doesn't do what it did in prior cycles. That's what I'm constantly looking for, is contrarian indicators, or like what could cause this narrative to fail or reverse before everybody thinks it can. Because right now, you know, there's a lot of price targets in between 100K and 400K. And I'm like, well, what happens if everybody starts to think that? Right?
Yeah.
Do we get a nasty shakeout prior to that? Does it far exceed it? Does it go to $1 million? You know?
Yeah, it could be a self-fulfilling prophecy.
Yeah.
As price goes up, oh, everyone's saying 100K, I gotta buy, now, and it could that could happen.
Yeah, that's why I don't really base any of my trades off of multi-month or multi-year trends. I look at kind of just swing trades. My predictability curve is somewhere in between a few weeks to a few months out. Right, anything shorter than that is too much randomness and noise. Anything further than that, variables, global, macro, political issues, right? I can't predict all that stuff. So
yeah, I would say from a macro variable standpoint, one of the things that I think people should think about, if your bull case is based on inflation and inflation expectations, there will come a point, a lot of these inflation-focused assets like Bitcoin or gold or whatever else, rates even, will price in the future expectations ahead of time. So we could be in an environment of heavy inflation still, and these assets could start selling off if it looks like the Fed is going to get more hawkish, and it looks like they're going to be, getting closer to raising rates. So just keep that in mind if you are kind of thinking about this from a macro variable standpoint. In just because inflation is high doesn't mean these assets are still going up, because a lot of that price increase is in anticipation of the inflation.
Right.
And then once we're in an inflationary environment and the Fed has to pump the brakes, that's when you could see these assets start to sell off even before inflation is done.
Yeah, it's just like the stock market. It's like it's moving in anticipation. It was bouncing when we were in the heat of literally a crisis, and it was going up, and everyone's like, what the hell's happening?
Yeah.
That's what happens.
Yeah, a lot of times in the markets, you have to do the opposite of what seems rational, right? Because by the time something's obvious and rational, it's too late. Kind of like buy the rumor, sell the news kind of thing.
Yeah.
And actually, there was a tweet that I wanted to look at here from Ben Carlson. He just did a real simple kind of analysis of S&P 500 returns when you have rising inflation versus falling inflation, and inflation above 3% versus below 3%. And basically when you have, rising inflation and higher rates, you're basically getting about a third of the returns that you get during falling and low inflation, right? So that's just something to think about. How are you guys thinking about that over the next decade, if at all, right? Like if rates do start to climb and kind of buck the multi-decade trend, are you going to just still trade and invest as usual, or are you going to make adjustments?
Yeah, I mean, I think that's why we've already been trying to adjust and make sure that we're not too over allocated to like high multiple, high growth stocks that depend on continued multiple expansion, because if you do have an expectation that rates are going to rise or going to need to rise over the next couple of years, then you don't want to be overexposed to those kinds of stocks, because as we've seen, those are the most likely to get hit once rates start ticking up. So yeah, I mean, we're not doing anything too drastic. Like a lot of the stuff, I own that are some of the largest positions in my portfolio are either special situation investments, value stocks within tech, stuff like Dropbox and stuff like that. So I'm not too concerned, but You
mean you're not 90% Tesla? Yeah, man, Tesla's taking a beating along with obviously ARK, because I think that's their biggest position or one of their largest positions.
Yep.
So for anybody that doesn't know, let's talk a little bit about this. I know Cathie Wood and ARK have been getting both sides of the coin. People that have been, critical of them, people that have been coming out in support of them. What is your take specifically, Travis, on Cathie Wood and ARK? And maybe just do a recap for anybody that doesn't know what that situation is.
Yeah, because ARK's hot right now.
ARK has been very hot over the past year. It's one of the fastest growing ETF families and fund management companies over the last few decades. They've attracted a tremendous amount of assets and have had fantastic performance. So you have to tip your cap to them. They have taken advantage of the momentum. They have been in the right stocks at the right times until recently. I personally think that their process needs some improvement. I think that they are they are a little bit dangerous in the way that they invest. They get overexposed to stocks that are, pretty far out on the valuation range, I guess you could say.
Yeah.
Spectrum. And so they're very heavily overweighted to a portfolio of momentum and story-based stocks. And so their portfolio is very correlated. And that's why you see when you have a sell-off in those types of areas, you get a very, very quick drawdown.
Yeah.
The other thing about ETF families like this is that they can see very quick inflows and very quick outflows. And that can force them to sell positions. ARK has been forced to sell some of their positions over the last week as the sell-off has occurred. Because people start taking their money out when they see those ETFs going down. So they're very reflexive. So they can be quite dangerous as ETFs go. I've been a little bit skeptical of some of the research work that ARK puts out on stocks like Tesla. I think they have cut a lot of corners, and there's some questionable things that they've done. So I have a very mixed kind of take on ARK overall.
Yeah. That's a very fair and pragmatic explanation, I think. But yeah, I mean, like you said, they're going to do the best when story stocks are making ridiculous gains, and they're going to get hurt the worst when things pull back, right? Unless they change their narrative, which I don't think they do, right? Like they can't really move in and out of positions that quickly because they're managing so much
capital. If they start a value
capital.
fund, that might be a bad look.
Yeah.
For the brand, they're not going to do that. Their thing is innovation, robotics,
Right.
AI, story stocks, more speculative things.
Yeah.
And if you're going to invest in that, if you can't take the heat, get out of the kitchen type of situation.
Yeah.
And you have to understand that when you get into an ETF like this.
Makes a lot of sense. So, okay, what else? What other market sectors or things are you thinking about? Anything on the macro picture?
One interesting area of the market over the past 2 weeks has been SPACs, because SPACs went from trading at really heavy premiums, like pre-deal SPACs that have raised money that haven't even announced a deal yet.
Yeah.
A lot of those were trading at really high premiums to where they initially raised their capital to go out and do a deal. And now those premiums have collapsed, or at least on a lot of SPACs, they've collapsed. So SPACs have become interesting again from different angles. We're starting to see some more arbitrage opportunities with SPAC warrants and things like that. We're also seeing some opportunities with some busted SPACs that have either completed deals or already announced deals, and now they're trading below the initial SPAC price. So a lot of opportunity in SPACs right now.
Mm-hmm.
So where things got overheated a few months ago, because you guys got in on some beautiful setups on SPACs. Like, let's just look at a couple real quick.
Oh, of course, like Chargepoint and SSPK.
Chargepoint is CHPT now. Or CH. You are just.
Oh my
you're
God!
having trouble on the keyboard.
There
today.
we go. Okay, I'm gonna just give you guys control. I can't even type right now. Yeah, so you guys got in initially where, in the low teens?
Yeah, like $12-13.
And then it got, like you guys said, I mean, you called it. It got way overextended. Went from like, obviously 10 to like 50, and then pulled back, and now it's like 50% retracement.
Yeah.
So are you guys looking for more buying opportunities through here?
I'm interested in buying more of Chargepoint.
Yeah.
Yeah.
And maybe not even this one specifically, but just, SPACs as a whole, after you get that first kind of boom cycle and then people kind of capitulate out, seems like you said, this could be a good place to maybe start looking at some entry points.
Yeah, it's kind of like you were talking about the classic hype cycle where you have the boom and then the bust, and then there's opportunity coming out of the bust for the longer term, true, real business or real opportunity. Like Chargepoint's a good example where probably got ahead of itself, was that trading at a $15+ billion valuation. They have a real business doing a couple $100 million of revenue, incredible tailwinds from EVs because they are the largest charging network in North America, and they have lots of growth opportunity, but it's going to take some execution. It's going to take some years and quarters where, they actually prove out that they're continuing to dominate the industry and the economics of the model are good. And so, yeah, I mean, I think, ultimately I like this company. I want to continue to own it. We sold some up in the 40 plus range.
Nice.
Took some profits, and now that gives us an opportunity to make it bigger if it comes back down. So I think we're going to see so much of this going forward with SPACs like this, where, the initial hype takes some of these stocks up massively, but then they come back down to earth as they actually have to become a public company that starts reporting real financials,
and the
real
market
progress.
humbles them, and
Yeah, I mean, everybody got on the SPAC train, and that left the station very quickly, and now people are getting a dose of reality.
Yeah, I'm looking forward to seeing what some of these, new companies come out with in terms of earnings. I mean, definitely not trying to jump into anything too quickly. I'd like to see some execution and, you know, be able to make a better decision because there's so many of them.
Oh yeah, hundreds.
So many.
Hundreds that have raised capital looking for deals, and you know, tens of SPACs, or probably now pushing 50 to 100 that have announced deals already. And
it's wild.
There's some funky stuff. One that I actually have a little bit of position in is DMYI, which announced the first. If they succeed with the deal that they've announced, they will be the first publicly traded quantum computing play. So DMYI is acquiring.
Interesting.
Yeah, they announced a deal to acquire IonQ, which is.
Did they announce it on this day where there was the gap up?
No, that was actually the rumor of the deal. And
when was the deal announced?
It was announced this past week. So
okay. It's interesting to see like a deal get announced and it's still at the NAV price.
Yep.
Yeah.
Why do you think that is?
Well, it got caught up in the SPAC sell-off, and I think there could be some issue here too with the fact that the company itself, IonQ, doesn't have a whole lot of revenue yet. It's only doing a couple $1 million of annual revenue, and it's still somewhat conceptual in that, like, to go full commercialization of their quantum computing hardware, that, you know, still a few years out. So yeah, it's still very much a concept stock and got caught up in the SPAC sell-off. But what's interesting is, like, you've got really, really world-class investors in the deal, like Silver Lake, probably the best technology-focused private equity firm out there in the world. And you've got, you know, Bill Gates' VC arm, Google's venture arm, and just a number of pretty phenomenal backers here. So that's interesting. I think the idea that you can own a piece of a quantum computing company is kind of cool. It's kind of like owning, you know, Intel or Apple or Microsoft, like very early days. You know, it's still at a fairly low market cap. So they still obviously have so much to prove out to make it a real business.
What's the biggest thing that quantum computers are going to do for society?
Well, they'll be able to tackle problems that require intense amounts of computation. So there's certain classes of problems that require, at least to properly solve them, require iterating through, you know, millions and billions of solutions, and classic computers can't really do that well. So like exponential computation problems can't really be handled super well by classical computers. You know, like there's famous problems that would take like the length of the life of the universe to solve, right? Because there's so many combinations and permutations if they were to brute force the problem. Whereas quantum computing, it is thought, once they get the error correction on the qubits and enough qubits that are essentially the processing units, when they have enough of them and they're quality enough, they should be able to solve, at least partially solve, those problems in a much shorter amount of time. So you think about things like problems like UPS or FedEx when they're trying to figure out what the most optimal route is. You know, there's an infinite amount of routes that even a truck in a given city could take to get to a destination or a set of destinations, right? And that, in a classical computer sense, could take many years or decades to actually solve that problem efficiently, whereas a quantum computer theoretically might be able to do it in, you know, a few hours or a few days. Cryptography, that's another one. That's obviously one that's near and dear to the Bitcoin community's heart, because if quantum computers get good enough in the next few years to crack your traditional RSA type of cryptography, then that could be a problem in the short run for blockchains.
Yeah, I've read both sides of the coin on that. I mean, I'm not obviously a quantum computing guy, but I'm not immediately threatened by it.
No.
You know, we'll have bigger issues if that stuff starts to get cracked.
Yeah, and it'll be clear once they're getting close that the blockchains will have to switch to a alternative type of algorithm or cryptography set that is more resistant to quantum computers.
Yep, absolutely. Why don't we do this? Let's take some questions. I know we've covered a lot of ground today between NFTs, why Trav just spent $10 million on LeBron James, top shots.
Did you put in that 2.5 million bid for Jack Dorsey's Twitter?
No, that was one of my my pseudonyms that did that. Yeah, no.
Who is buying his tweet?
I don't know. It got bid up, I guess.
Or is it all anonymous still?
Yeah. Yeah, I don't know. I mean, it's super interesting. I always like on an initial hype cycle like this that we're seeing on NFTs, I love to just sit back and watch people lose their minds over it. And then once it deflates, then I go, okay, where's the real meat and potatoes here? You know, where's the sustainable stuff? So yeah, let's see what questions you got. Hey, what's up, Neville Medora? Good to see you, man.
What's up, brother?
All right.
Greg says my boy Trav is wicked smart. He is.
No.
Yeah. Oh, talking about, NASDAQ, we are getting a little bit of a bounce today off of the 100-period moving average,
Yeah.
Yes.
which has actually been holding since the crash last March. So, yeah, pretty interesting timing. We'll see if stonks can get back up above the green territory, at least on the NASDAQ. I know, let's go back to the yearly charts. You've definitely got the S&P that's still green. But Bitcoin, again, has really started to show signs of being uncorrelated, which I think is just super healthy for Bitcoin.
Yeah.
Right. We've talked a lot about this over the past few years. It kind of goes in cycles. Like sometimes stocks and crypto will be correlated, but on the aggregate over a long period of time, they are showing signs of inverse relationships, which is what you want for your portfolio.
Heck
Yeah,
yeah.
I was hoping for that NASDAQ crash, but it didn't happen.
It had a pretty good sell-off.
Yeah.
Especially among, there were individual stocks, like Chris said earlier, that, were down 30 to 50% in a week.
Yeah.
So
I just wanted to see a lot of names come down a bit more to get to my valuation targets. That
Yeah.
was what I was kind of waiting for, but we'll see.
Nice.
We'll see what happens.
Awesome. All right. I see a couple of questions about Cardano and a couple of other, I guess, like Ethereum competitors. Cardano is one that's really gone crazy. And actually a few others, Tezos was one that we got into a few years ago, which has not really had like a full bull cycle. And I've taken a lot of profit along the way, but it's actually holding up quite nicely right now. My answer to, different Ethereum competitors is I lead with this very complex thesis, which is I don't know. Like
Wow.
I
So
don't
profound.
It's very profound. I love taking the opinion as an investor of I don't know. And what that does is it frees you up from trying to guess, right? So what I do is I trade the charts, and some positions and some movers I catch, some I miss, right? I don't stress about the ones that I miss. Like I didn't get a big position in Cardano, which has had big gains, but I'm okay with that because as of like I'm more cash now, but like a month or two ago, I was over 95% invested. So I had less than 5% cash. I was like fully extended almost. And then I've taken more profit along the way. But when it comes to trying to guess which of these projects is going to win, I just look like, does it have a strong community and a dev team? Does it try to solve a real problem? I'm not one of those Bitcoin maxis that goes out and says everything that's not Bitcoin is a scam, right? Like I think that's a ridiculous standpoint. Everybody can have their own opinion, but when it comes to which projects are going to win long term, I don't know, and I don't try to guess. What I do is I just trade the hype cycle charts, because charts are truth and you can see where capital is flowing. Where you get into trouble is if you kind of ignore the TA and you only hear the story and you buy into the story and you're like, I'll buy this project at any price. Those are the people that end up upside down 80-90%, right?
Are there a lot of people in crypto not paying attention to TA and just buying without kind of educating themselves on the charts?
I would say that's the mass majority of people that come into the space.
Because I feel like crypto is all about TA.
Yeah.
I mean, it's
It really is. Like the fundamentals are there to help you understand what the project's about and what it can do. And, you want to make sure you're not getting in a coin that has like scammy tokenomics,
Right.
pre-mines and just weird shit. But if you look at something and it's got a good foundation and it's got a good dev team and a good story, and it's not a blatant scam and capital's flowing into it, you can invest and trade it and you can make money on it. The danger is where you just forget about valuation and you just buy into the story and you say, this is the one and all the other competitors are shit. And people that become tribal, they lose. They generally lose. And what's also interesting is valuations on lower priced tokens typically have bigger percentage gains. I should do a report on this, but if you look at if you could back test the data and look at tokens that are like under $5 per token, even if their market cap is really big and it's expensive, because it's a lower price token, more newbies will be attracted to that.
It's like penny stocks.
Yeah, like penny stocks. And Tribe, weren't you saying in the stock market, like, what was it? Like there used to be X number of stocks under $5 or $10, and now there's like hardly any?
Yep, that's right. Yeah, last year was crazy in terms of the number of stocks that were under $5 or $10 that had like multi-bagger returns because retail investors were just buying them.
Bidding them up.
Yeah.
Bidding them up.
Yeah.
I think there was like less than 10 stocks publicly listed on like NASDAQ or New York Stock Exchange that were under $5 a share.
Yeah. Yeah, so we see something similar in crypto. It was like in the last bubble in 2017, it was Ripple. You know, we traded Ripple initially from like half a penny, but the last breakout we took was 30 cents to $3.
Yep.
And
I remember that.
CNBC was pumping it, and it just got ridiculous. And a lot of like newbies looked at Ripple and they went, oh, this is only $1, $2, $3 a token. I can buy a lot more of those than a Bitcoin at 10 or 20,000, right? So people have this anchoring bias of price per token, which really doesn't matter at all. You know,
I can buy so many Doge coins.
Yeah, exactly. You know, it makes people have that feeling of being token rich. I've got 1 billion or 1 million of whatever these shit coins are. Yeah. So a token like ADA here is much more likely to go from 20 cents to like $1.50 than something that's already 1,000 to 5,000. You know, if you look at the percentage gains, the smaller price ones, even if they're overvalued, typically make bigger percentage moves. So you can use that data as a trader and say, okay, well, if I get in low and I catch accumulation range breakouts on cheaper tokens, those could actually go up a bigger percentage. So something to kind of keep your mind on. All right, let's see here. Another one is Polkadot. This is one that Crypto Hustle, Rocky in our room traded beautifully, got in the accumulation range. This is one that I did not get in. This is where anchoring bias for me cost me money, because I was actually not convinced that this accumulation range was going to hold. And I was anchored to what happened with Tezos. And I'll show you this. So Tezos, basically, when it listed, it crashed initially from like $2 down to the ICO price around like 40 cents. And so I was waiting. I was actually salty about DOT because I think, what was the valuation? I want to say it was like 6 billion when it initially hit the exchanges. And I was like, I want a crash, you know, so I let my anchoring bias from my previous experience in Tezos affect my decision-making here, which cost me some money. So, that's something that can happen. All right, let's see what other questions you guys got. We talked about NFTs. For anybody that came in a little bit late, you guys can like rewind and take a look at those.
Yeah, I think NFTs for gaming, like there's some comments there about NFTs and gaming. I think it's a pretty natural fit there. I mean, gaming, I think in some sense has already had NFTs. They've just been more centralized.
Yeah.
And so now that you can decentralize that, or I guess maybe even create, you know, in most, let me back up. Most games have like their own digital, digital tokens or digital avatars or digital, products basically that they sell, right? Like the
land, tools, skins.
Exactly. So there could be an opportunity to develop a layer that sits atop like a bunch of different games or a network of games to where they're fungible across games.
Yeah.
As opposed to only working in one specific game.
Yeah. That's something, Decentraland, by the way, ticker is MANA. This is up 20% today. And this is kind of I think a more sustainable use case. Like I get excited more about the gaming stuff than I do, like digital, like NBA cards and stuff like that. Yeah. Like when you have like a game or a virtual world where you can own land and like provably scarce, even if it's digital stuff, like I think there's more value in that than trading cards. That's my own bias though. I could be wrong. People are paying millions of dollars for this stuff, but I think that, you know, if you think decades out, 10, 20, 30 years, where is people's attention going to be? It's probably going to be with a VR headset or contact lenses or whatever that's going to look like. People are going to be living more and more in these digital worlds. So I think those scarce assets, be it land or houses, you know, we saw like with Roblox, what's going on with that. They just went public and, you know, just things in that sector, I'm super bullish on. So
Yeah.
what's your take on Roblox?
I haven't. Somebody was asking me about Roblox earlier today, and I haven't really done a deep dive on the financials yet to really figure out where I would buy it. Yeah, the direct listing is supposed to happen, I think, what, today or tomorrow?
Tomorrow.
And so
Yeah,
that's just about to be public, but they're doing a direct listing. I think the valuation is going to be pretty high, but pretty interesting business. They've really built a dominant franchise, especially for like certain age groups. So yeah, I'm kind of interested to see what happens with it, but I don't know enough about it to really have an informed opinion on where I'd buy the stock yet.
yeah.
Didn't you mess around with it a little bit?
I did. My niece is all about it, and she was showing me all the stuff that she was doing, and so I went down a rabbit hole for like a week or two, and I spent way too much money on there. I spent probably a couple $100.
Yeah.
It's so easy to do, and I'm like, okay, I get why this is super valuable, and like the way that you can basically be a creator and a designer, and like, you know, the ecosystem and the economy within it is super interesting.
Yeah.
And I think this is probably going to be the first of many large things like that.
Yeah.
You know, there have already been other, you know, like cult games, but I think the fact that you can do it on a mobile device makes it super accessible.
Yeah.
And, you know, things like Decentraland and like, I'm super bullish on that space. I'm going to put way more focus there than I would on trading cards because I don't know. Do you still have baseball cards from the 90s?
Somewhere I do. I think maybe in one of my family's attics or something, you know, somewhere. Like,
Yeah,
there's a box.
I do too. Yeah, they're stuffed away, and like,
Yeah.
if you remember, like the old magazines, you know, and counting the value.
Tops and
Yep.
what was the other one? Yeah. There was another big one. I forget now. But yeah.
Yeah, it was super fun, super interesting. I just think those things are very cyclical, and. You know, do they have a cult following? Sure. You know, sports, a lot of people love sports, but I think interactive games and like having ownership of like different things that are more experiential is higher value than digital representations of like a player in some sport. I don't know. What do you guys think? Am I right? Am I wrong? Like this is just where my head's at with that.
So it's kind of like you're in a video game playing and you catch this land or you buy this land.
Yeah.
And like in the video game, no one else can buy that land.
Yep. And you can trade different assets, you know, skins, clothing, you know, weapons,
Kind of like
different
Animal Crossings, but you actually pay for the land and someone can buy it off of you for more than what you paid for.
Exactly. Yeah.
If they really, really, really want it for whatever reason.
This is where things are going. You know, the more our lives become digital, the more value those provably scarce digital assets are going to have.
That is an interesting concept.
Right? And like people in the boomer generation and even people in our generation probably look at that and go, it's bullshit and it's ridiculous.
Oh, they're probably laughing.
Yeah. But Gen Z and younger, that's what they're all about.
And there is an art component and a kind of innovation component too, because like people will create these amazing representations, like part of a map or a map itself or a new skin and things like that. And those things become, you know, just as valuable as anything else in the real world because like they are scarce. Someone spent a lot of time and effort to create it. They should be rewarded for doing that when people find it valuable. So yeah, it's kind of cool to see what people create when they have a sandbox to like create part of a world or things like that. So
yeah,
it's like, you know, that book Ready Player One or the movie Ready Player One. You know, in that book they talk about there being different worlds that people create where they kind of create unique experiences or features in those, you know, worlds. And it's like, yeah, why not? I mean, you know, why not? I mean, like if someone is a fantastic creator of a world like that, why shouldn't they be rewarded?
Yep.
You know?
And the more expensive it becomes for people to own real estate and things like that, I just see the world getting driven to those digital worlds, you know. Interesting stuff to think about.
For sure.
Yeah, a lot of Pokemon fans in chat. Yeah, I know that was another thing that caught a lot of hype. You know, which that's kind of a combination of gaming and, you know, cards and digital representations of things. I don't know, man. I can't get behind the sports stuff that much.
Yeah.
I just think it's going to be a boom and bust.
Yeah, I agree. I think we've only just scratched the surface, though, of what they're going to be able to do with like digitally verified ownership and content.
Yeah.
Because I agree, like the idea that you're just selling like a video that can be viewed anywhere else online is a little silly. But if you also attach like media rights to it, then it becomes something more significant. You know, things like that.
Yep. The more experience somebody can have with it, the more interactive it is. Like if you own a piece of land in this game and you can literally like have your friends over to party and they're like, "Oh man, look at your land." You know?
Yeah.
Like that's where it's headed.
Even the athletes themselves with this NBA Top Shot stuff, what if they somehow attach like, you know, things like tickets to games or like experiences with the athlete themselves? You know, you get to go meet LeBron James for lunch or whatever, you know, then it starts to kind of have some even more real world tangible value attached to it.
Yeah, dude. Yeah, it's kind of like they did the who's the Old Town Road guy? Lil Nas X.
Yeah.
He did a concert in Roblox.
Yeah.
And that was a massive event. And so you're going to see more and more stuff like that too.
Yeah, for sure.
Yeah.
All right, let's see. We got a few more questions here. Do you think that decentralized exchanges will kill off centralized exchanges somewhat in the future? It's a good question, Steve. I don't think they'll kill them completely. I think it'll be kind of two rails. You'll have centralized that have some benefits and decentralized, in my opinion, has more benefits. I don't know, maybe a few years out, 5-10 years out, I think more trading volume will be on decentralized exchanges. And I think that's the natural progression and evolution. But I think there will always be a use case for centralized exchanges. For anybody that hasn't used Uniswap or you know, Kyber or any other of the decentralized exchanges, like go do it and learn it. Now's the time to do it, right? Now's the time to figure out how to take control and be your own bank and self-custody assets and learn how to do this peer-to-peer stuff where you don't have to rely on a third party like Coinbase who could close your account for any reason or could get hacked and do an exit scam. And, you know, like just trusting other people with your private keys is not really a smart thing. It's a necessary evil right now, but like I do hope in the future that the DEXs do take the lion's share of the capital away.
Mm-hmm.
Sorry, Coinbase.
Sorry, Coinbase. Well, that's the thing. Like like Binance and some of the other bigger ones, they understand the trend and they're.
You think they'll adapt or?
Yeah. I mean, they're gonna have to, right? They're gonna try to compete or get competed out.
Don't shed a tear for Coinbase. They're going to do their direct listing here in the next 2 or 3 weeks.
That's right.
At a rumored $80 to $100 billion valuation. So they're fine.
Yeah.
Which, you know, I heard some people saying that's going to take capital away from Bitcoin. I don't think that's true. Like, I think that's going to add to the investment in crypto as a whole.
Yeah, it kind of, it basically improves the reputation of crypto in general. There's a crypto exchange, publicly traded. Where are they going? NASDAQ or New York Stock Exchange?
Actually, I don't know. That's a great question.
Whichever one it is. I mean, it adds to the credibility of the crypto space, I would think.
Yeah. If you, like, I'm salty because I wasn't able to invest in this early on. But if you look at the early valuations of Coinbase, their Series A back in 2013, they raised $6 million at a $23 million valuation. And then, you know, their last Series E round in 2018, they raised $300 million at an $8 billion valuation. This is why I always like to use this as an example of like why angel investing and startup investing is so awesome if you can get in the right stuff.
Yeah.
Imagine investing at something that's worth, you know, 25 million bucks. It goes public at what, 50 to 100 billion. You only need one of those in your lifetime.
That's right.
You know, what did YEC, their Airbnb investment, it was like 25K turned into 2 billion or something like that.
Mm-hmm.
That's a great point.
Yeah. I mean, I had a angel investment exit last year.
High five.
High five. It was a 7x. Nowhere near this, you know. I just need one. I need $1 billion exit.
1000x.
Yes.
Yeah. There's not very many of them. but there have been more in the last decade, and they are. Yeah, that changes the game. That changes, like, that's generational wealth from one investment.
Yeah.
I feel like angel
wild.
investing is starting to become really talked about more mainstream. Like,
Yeah.
Yeah.
I'm seeing, at least in my world, I'm seeing a lot of women start talking about it.
Really?
They're starting to talk about, like, I'm an angel investor. I made my first angel investment. And they're
Oh
really,
yeah, I saw somebody tweet
yeah,
that.
they're really into angel investing. And it's just interesting to see people getting interested in private investing like
Yeah. I mean, I think Shark Tank made that a big thing, right?
Yeah.
Like before Shark Tank, nobody really knew what angel investing was, or, you know, just early rounds. People only knew stocks, right?
Yeah.
And also with, you know, all these IPOs and people realizing like, holy shit, like most of the growth is not even in the stock market. It's like, if you can get in on rounds like this is where the money is really made.
Yep.
Yeah. So it's interesting.
Coinbase, by the way, is listing on NASDAQ,
Oh, is it? Okay.
That makes sense.
which isn't too surprising.
Yeah.
What crypto exchanges do you guys trade from? All the big ones. You know, you basically what you want to do is, you know, look at a list of coins. You know, go to say like Bitcoin, which is back above $1 trillion valuation today. By the way, so that's awesome. Look at the exchanges, sort by volume, and then see it where you can open accounts with the largest liquidity. That's really it. And then also like the decentralized exchanges, which sometimes don't show up here. For different tokens, they will. But yeah, that's really it. And everybody, you know, I know people around the world have access to different exchanges. Depending on where you are, you want to figure out what exchanges are accessible to you. What about actually owning a piece of land like Atlanta, I think is what you're saying? Atlanta?
I think,
Is
yeah,
that-
we've talked about, or it could be Atlanta or
I
Atlantis.
can't tell what.
Yeah.
Is that a? Is
Yeah,
that
I
a
mean,
coin
look,
or-
I'm super bullish. I've actually been looking at property in some mountainous regions. Like if you look at anywhere that gets a lot of rain and has access to water rights, you know, the Northeast, the Appalachians, right? Like, I don't know, investing in desert land kind of freaks me out.
Yeah.
Even here in Central Texas, like, you know, just the thought of buying on a lake that could be dry in a few years is, I know we've talked about this. Have you had any change of heart, or what are you thinking about land?
No, I think you have to be very mindful of the changes like in the climate that are causing, like you said, shifts in value of certain areas of land and property. Because, yeah, I mean, if in 20 years, you know, our area of Texas is going to be more desert than what it is now, then you probably don't want to be owning that, right? So, yeah, I think there's, you know, big changes happening, and so that's something you probably want to consider if you're looking at a long-term land investment.
Yeah.
Atlant is a platform where you can invest in tokenized real estate
Oh, yeah. Okay.
assets.
Do you own stake tokens? Yeah. I mean, look, staking, I kind of equate that to like, you know, dividend paying stocks in a way, you know, Tezos and a few others. I think some of them we've joked have almost become stable coins because you're just getting that passive income, which could be nice. But again, you've got valuation risk, right? If something crashes by 50%, staking rewards can be cut. So, awesome. All right. So SPACs are helpful for non-accredited investors to angel invest. Yeah, that's one of the things that we've been heavily critical of is the accredited investor laws, which just, you know, I can't believe they're still not making massive changes to that. They did increase, I believe, the crowdfund CF. So they raised the limit from $1 million to $5 million, which helps non-accredited investors get into better quality rounds, because any company that's going to only raise $1 million, you know, like what are they really doing? It's probably a much smaller addressable market and project, where at 5 million, you could at least get maybe some real companies in there. So I don't know. I think that's something that needs a major overhaul.
Yeah, and the SEC is pushing towards making the accredited investor definition encompass people with professional certifications and stuff. So we've been really excited to see that. So that's still in kind of in process.
We're gonna see people taking the Series 7,
Yeah.
like the series. They're gonna make so much money from everyone just doing it for that.
Yeah, I mean, it makes sense, right? Like, why should somebody that has $1 million but doesn't know shit about finance be able to invest, but somebody who's educated and doesn't have $1 million yet, why can they not invest? Like, that just makes no sense.
Agreed.
Keeps the rich getting richer, and the YECs of the world making billions, and the little guy or lady not able to get access to that stuff.
Yep.
So that's got to change. And on that note, we can go ahead and wrap it up. We've been going for over an hour. So, guys, thanks for hanging out with us. Again, just to kind of recap, we talked about why Bitcoin and Ethereum and a lot of other of kind of the large cap cryptos have been making some rebounds this week. Talked about how Bitcoin is far outpacing the stock market so far in 2021. Gold is still down about 10%, which is interesting. There's definitely, I think, capital flowing from gold into Bitcoin. And yeah, we've seen a lot of high flying stocks and tech stuff that's pulled back about 35%. Trav and Nikki went into some detail about some of the markets they're looking at, talked about some on-chain factors and why I don't believe a top is in, but again, anything can happen. I'm still long. Yeah, what else, guys? What other we got 1.9 trillion on the way, which is insane. And what does that put us? 4.5 or 5 trillion over the past year of new dollars just, being manifested out of nowhere.
I will give people a little tip on the stimulus stuff if you're in the U.S.
Okay.
If you are close to making enough money to actually be able to get the checks, consider doing something like contributing a little bit more to a 401k or an IRA to get your income, your adjusted gross income down so that it may get you into that qualifying.
So say someone's married, what's the limit? 150K?
Yeah.
So if you made 170K, contribute 20K, that'll get you
HSA. If you look at your 401k, look at your IRA, it's actually based on adjusted gross income. So there are above the line deductions you could be taking to get that number lower. And it'll all shore up on the 2021 tax return if you end up being eligible this year, because of doing that.
Yeah.
And then, they're going to look at 2020's return, but obviously 2021's a new year. So just a little tip.
Sweet. Yeah. So as people in our community know, Nikki is a certified financial planner. So she knows all the tax and structures of the wealthy, how to get a hold of all the free monies out there.
A lot of people are coming to me. How do I not pay capital gains tax?
Well, what you do is you disappear and you run from the law your whole life. They couldn't get Al Capone on murder, but they got him on tax evasion. So pay your taxes. All right. Anything else you guys want to say before we wrap up?
Oh, crap. Tax season is here, isn't it?
Yeah. Wah, wah, wah.
I guess we've got a little bit more of earnings season left, so we'll see if anything good comes to us.
Yeah.
And if any new news drops.
Yeah. I know you guys have been patiently waiting for pullbacks, so good to see that we've got potentially some more buying opportunities, and yeah, we'll see what happens over the next few days.
Anybody can figure out a way to have the NASDAQ sell off some more, that'd help me out greatly.
Yeah, dump your bags, everybody.
Let's
get some deeper pullbacks.
Yeah.
All right. Well, hey, thank you guys for the questions and the interaction. Hope you enjoyed the show. We really love putting this on for you. If you enjoy it, go leave us a review on iTunes podcast. Share this with anybody you think would get value, and we'll see you next week.
All right. Bye-bye.
Take care, guys.